What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to explain why not investing your money is a bad investment. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel, try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description, and of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account any amount, even as little as a penny, and if you refer your friends to the app, they're going to give you even more free stocks right now before the end of the month. If you do so, they're going to give you at least one free share of Google with the opportunity of winning all the way up to 20 free shares of Google. It's whatever you land on the spin wheel. Don't pass up on an opportunity. Webull, link in the description. Okay, so today I wanted to talk about why not investing your money is a bad investment, because the alternative to investing your money is not investing your money, maybe spending your money or saving your money or letting your money just not go to work for you. You are already going to work and earning those dollars. The dollars that you earn, even if it's a small fraction of what you make, a small fraction of your paycheck, whatever's left over after the bills, put that money to work for you. Because if you don't, I mean, let's be fair, right now, the inflation that we're seeing, it's pretty hefty, but it's also not typical. Inflation is supposed to be about 2% per year. That right there, not that big of a deal. Inflation's actually a good thing. We should have inflation. Inflation should be seen as a positive if the economy is growing at a rate to keep up with it. In a situation like that, that would be a fantastic thing. Everything becoming 2% more expensive every year isn't that big of a deal if we are becoming at least 2% wealthier year after year. In a situation like that, it balances everything out, and it's actually a good thing because that means the economy is growing and we're becoming richer. Inflation is not a bad thing, unless, of course, the economy is on a downward trajectory. 2% inflation could be pretty painful if we are not growing. So imagine how it feels to have 6% inflation, 7% inflation, 8%, 9% inflation. Well, guess what? That just sums up the last 12 months we've had. We've had sky-high inflation, far above 2%. And the economy is in a recession right now because we had negative GDP growth. So not only are we not growing, we're seeing negative growth. But anyway, we're not here to talk about that. We're here to talk about average inflation, that 2%. What you need to do is figure out a way to invest your dollar bills so that they generate 2% or more. So you see that return, whether it be capital appreciation, whether it be cash flow, whether it be business, stocks, real estate, whatever your primary method is, whatever makes the most sense to you. There's no right or wrong answer. I can't say this is better than that or that's better than this. I can't say that. It's whatever works the best for you. Just make sure it's invested in something that will increase by 2% or more per year. Take those dirty, disgusting, filthy, grimy IOU debt notes. See these dollar bills right here? See this currency? This stuff right here. Like, ideally, I mean, it's nice to have because I have bills to pay as well, but whatever's left over, I try to get rid of it as quickly as I can by investing it as quickly as I can, because I don't want to hang on to something as grimy as this stuff right here. This stuff has been touched by some of the most filthy, vile people on the planet. We got, drug dealers out there. We got scammers out there. We got murderers out there. We got politicians out there. They've used these things. I don't want to touch what they've touched. Stuff's disgusting. I try to take it as quickly as I can and invest it as quickly as I can, because the quicker I invest it, the quicker I can get that snowball rolling. I talk about this all the time. When that snowball gets rolling, it starts to collect even more snow. The more snow it collects, the faster it moves. The faster it moves, the quicker it collects even more snow, which means the faster it moves, the bigger it gets, and then it starts collecting even more snow, and it just compounds. That's the compound effect. The snowball effect and the compound effect are synonymous, pretty much. So you got to think of it like that. And you got to invest. One way you can go about investing is the S&P 500. That's what I like. That's my favorite form of an investment. It averages 8% per year, adjusted for inflation. And one way you can go about beginning to invest is either in a regular account or a Roth IRA, a tax-free retirement account. They offer this on Webull. Like I said before, you can get up to 12 free fractional shares but just by downloading the app and funding your account. And if you refer your friends to the app, they're going to give you even more free stocks. Right now, if you do so before the end of the month, they're going to give you anywhere between 1 and 20 free shares of Google. Do not pass up on an opportunity. We will link in the description. But make sure you are investing in something that on average sees a return of over 2%. This can even be a high yield savings account, by the way. You don't have to necessarily invest it, but make sure it's being put to work in a way that surpasses average inflation. I know right now we're seeing high inflation. High inflation is not average inflation. Average inflation is about 2, maybe 2.5%. So put it into something that will pay you more. That's where some of my uninvested cash goes. It's in a high yield savings account, which is at the moment paying me 3.4% APY. That's higher than the average inflation. It's not higher than the current inflation, but inflation has been on a steady decline, and hopefully we start to stabilize and get a little bit more back on track. But either way, my uninvested cash is generating 3.4% right now. My invested cash is not only, like I said before, in broad market index funds, and I'm seeing, or should be seeing, about an average return of about 8% adjusted for inflation, 10% without factoring in inflation, with cash flow, and eventually, hopefully, working my way up to my first rental property a couple years down the road maybe, which will produce rental income, more cash flow, and the value of the property should go up over time. There's a lot of different ways you can go about doing this. Business, stocks, real estate, even a savings account, which I don't normally recommend. That's just where I'm parking some of my cash while I'm saving up for a purchase that I need to make later this year. I just figured, why not generate a little bit of interest income while I wait? I gotta wait anyway. The alternative would just be to hold on to some cash and not generate anything at all, or to invest it and then have to sell and then pay taxes on the gains and then use what's left over to make my purchase. I just didn't want to deal with that headache. So I parked it in a high yield savings account, 3.4% APY, and the rest of it goes into, for the most part, broad market index funds at this point. Make sure you are putting your dollars to work. Make sure you are not falling into the trap of not investing your money. Not investing your money is a bad investment because it devalues over time. A lot of people like to think, oh, if you don't invest your money, it won't grow. Yes, it will. It absolutely will grow if you don't invest it, but it'll be negative growth. It'll go down, guaranteed to go down. A lot of people are afraid of making the wrong investment. Like, oh, I don't know if I'm going to make the right investment because, you know, what if it goes down? Well, guess what? Not making the investment is going to go down too. Which is why I recommend broad market index funds, because it's the closest thing we have to guaranteed, especially over the long term. Not a single person has lost money over a 20-year period by investing in broad market index funds. Not one time in history has that happened. So I'd say that's a pretty safe bet. But anyway, head on down in the comments and let me know anything and everything related to today's video topic and whether or not you agree with me in the title of this video. Not investing your money is a bad investment. If you guys like today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive weekly content. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. Over 50 different flavors to choose from. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. Any amount, even as little as a penny, it still works, it still counts, you still get your up to 12 free fractional shares. And for every friend you refer, they're going to give you even more free stock. Right now, if you do so before the end of the month, Webull's going to give you a guaranteed free share of Google with the chance of winning all the way up to 20 free shares of Google. Don't pass up on an opportunity. If you don't want the stocks, go and get them anywhere. They're free. Take them, sell them. Congratulations. Now you have the cash to do whatever you want with. We will link in the description. Everything linked in the description. Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Dr. Justice Smiling. Peace.